Good evening, everyone. 7:45 p.m. on Wednesday, January 25th, 2023. It is 7:45 p.m. Eastern New York time, and I hope everybody had a great day. So just doing a follow-up video to the video I made last night regarding this kind of scalping day trading strategy. And all I wanted to do is just look back at today's action and see if we can start creating some patterns here, and then just talk a little bit more about this. So I won't get into a ton of detail about the setup. I made a video about this time yesterday or sometime yesterday, so go back and watch that one. It'll tell you exactly what this is about. But basically what we're trying to do is take advantage of the price movements that happen during the New York session on certain U.S. dollar pairs. Probably happens on all of them, but there's only 3 or 4 I actually look at that make it pretty predictable in terms of the time that these happen every day. And these are trades, again, that are designed to be pretty short term, maybe max of about 2 hours in and out. So whether you want to call that a scalp or a day trade, it's up to you. To me, a scalp is you're in and out in a few minutes. I don't think you'd be holding it that short of time, but they're certainly short day trades. So basically it involves just marking off the beginning of the New York session, which the this left-hand vertical line represents the start of it, and then anywhere from 1 to 2 hours into the session, you generally get a push in one direction. And then you usually get an opposite one after that. And so let's just look at a couple of these charts. Now, again, this is on the 5-minute chart. So, again, these are not going to be big pip makers. And that's one of the things about this, guys, is, you may or may not get a trade every day. You'll get a trade most days in at least one of these pairs. But, they're not going to be big pip makers. So don't, be greedy and, expect to hold these for extended periods. Again, most of the time you're going to be out of these trades by noontime, by the time London closes, noon Eastern time. And that's it. And so I would say the average number of pips, if you caught a decent move, would be 30 to 50 pips. You could get lucky. You could have a wider range day, maybe pick up, I've seen some of these in back testing, pick up 100 pips, But on average, I would say probably 30 to 50 pips is about what you can expect. So, position your money accordingly. Don't go crazy and over leverage and over risk yourself just because it's a small amount of pips and, because you want to make more. And but on the plus side of this, your risk should be small in terms of your stop loss because, again, you're trading on a short time frame. So for me, I'm looking at a 5 to 10 pip stop loss on most of these, and that's it. So if I'm wrong, that's the most I'm probably going to lose anyways. So, and just to talk about the other part of this is that, because this is a 5-minute time frame, guys, you're going to be, the candles in real time are going to be moving pretty fast. And so it looks really great in hindsight because the candles have already painted. But in real time when they're moving, because it's such a short time frame, you have to keep that in mind because the psychological effect of that when you're seeing candles on short time frames paint so quickly and be very volatile and they look like there's these huge movements, you have to remember they're not huge movements. They're just, you're looking, way down inside the price action. And, you just have to keep that in mind and not be so trigger happy to get out of a trade because you think, oh my God, all of a sudden it's going to go against you, especially when you remember that if you practice good risk management and don't overexpose yourself, that you're going to have a pretty small stop loss. And so if you do get taken out, it should really be nothing. So, relative to your account size. And, I can't tell you what to do, so I'm not going to pretend to. You have to decide that for yourself. But those are just some of the things to keep in mind with this. So again, in last night's video, I kind of told you the setup and, why this happens. So I'm not going to review all that. But we just want to review a couple of these areas today on a few of these pairs. So this is the euro dollar, just so you know, the 5-minute chart of the euro dollar. And so here's the New York Open right here, 1500 on my broker. Okay, and again, we're basically ignoring the first hour at least of price action, maybe even 2 hours. And so we opened here, we came down, okay. Now on this pair, we actually had about 1 hour in, we had this nice move up, 53 pips. And then we hit the top here. And then look at this. This was right at 1700. So exactly 1 hour later, we peaked out again, and we came all the way back down, and another 50 pips to the downside. And then that's probably where I would have gotten out, because this is 1815, so this is this is 11:15 a.m. Okay, so honestly, I don't know if I would have traded, but you could have theoretically taken another one and rode it all the way back up for another 40 pips. So in here, you got about 140 pips. Now, even if you only took one of them, you could have picked up at least 40. So, but and obviously in hindsight, you know, you can see what's happening here. Now, as I mentioned last night, one of the things you can do is put a look at a higher time frame and try to trade in the direction of the larger trend. So if we go to the 4-hour chart, we can see we're clearly in an uptrend on the euro dollar. And so this up move here would have been the preferred one to trade. So if I was looking for a potential entry here, this is probably the one that I would have taken, okay? Because this one went the furthest, and again, that makes sense, it went the furthest because it's in the direction of a larger trend. This one was more corrective, didn't go quite as far, okay? And then this one, again, I may not have taken this one because it was after the London close anyways, although it did make some pretty good progress. But so we're just really looking at this one and then this one down. So again, basically, guys, you're looking at around the 1 hour mark and the 2 hour mark of these pairs, and you want to see what's going on. And again, preferably trade in the direction of the larger trend, but you don't necessarily have to. Now, if you wanted to trade, if you took this one long because you were following the trend, you waited 1 hour, it was right here, jump in right here, you can see this big wick form, so there's obviously a lot of buying going on right in this area. It goes back to kind of the session low of the day, because this was the start of the new day back here when New York closes. So this was the high of the day. We got down to the low of the day. We came back, retested that, and then went right up. You could go, if you wanted to go to a 1 minute time frame if you really want to go crazy here. Okay, and yeah, I gotta move this thing. Sorry, guys. I gotta scroll back here. Okay. So here is the open, and again, we made this stab down, and you could have said, okay, I'm gonna, and you can see this impulsive move. You can say, you know, I'm gonna take this long, you know, at the break of this candle, or maybe even better, like a little trend line. Whoops, that's not a trend line. A little trend line break right here off the 1 minute chart. Enter right in here. Put your stop down here and let this thing go. If you had gotten in, you know, maybe somewhere around here, you know, again, 50 pips. Okay. And then on the way back down, you know, once you see this thing peak out and maybe you get an engulfing candle, you trade it back down. Okay, so that's basically how you do this, guys. And again, this is a 1 minute chart, so these candles are going to really be painting fast. And again, like I said, guys, this is a big psychological element trading on these really short time frames, because the candles move so fast. It's very easy for you to get sucked into either opening a trade unnecessarily or closing one too soon, because, you know, maybe right here you see these red candles, these bearish candles painting really quick. You're like, oh boy, I'm wrong, it's going to go down, and then all that was a little correction. Or again right here, and not just staying with your plan. So if we go back to the 5 minute and we look at this, so if you wanted a kind of a judgment call where to get out, maybe you look back to target the highs of the day. So if you had targeted back up to here on this run up, you would have gotten out at the close like of this candle, and you would have missed, you know, 1 5 minute candle. You would have missed, you know, 4 to 9 pips right here. So again, you take this long, target your exit right here, and it did go up a little further and then sold back down again. So using the highs and the lows of the day are nice areas for entry and exit. It doesn't always work that way, but they're good areas to look at when you're thinking about, where you should get in. Okay, and you can see on the sell-off, it came back down, back into this little demand area down here, where we had some buying on this little retrace, and then it went back up the rest of the day. All right. So let's look at dollar Swiss, which is kind of the opposite of the euro. Again, here's the market open. All right. In this case, we already opened at the low of the day. All right. We already were at the low of the day, so we're not going to really necessarily look for it to return to the low of the day, because what happened was we went up. Here was your first hour in, okay, and then it shot right down. So here's 1 hour in exactly. Look at that. Exactly at 9 a.m. We went up a little bit. We grabbed some liquidity, came all the way back down, 56 pips to the bottom. All right, and then we turned exactly at, 5 minutes after 10, so almost exactly 2 hours in, and we went back up another 40 pips. And then that probably would have been it for me anyways. Okay, we go to the 4-hour chart. Okay, we're in a downtrend currently. Okay, so again, which would make sense that this was the more impulsive move because it was in the direction of the trend. But you certainly could have traded this back up too. You just wouldn't have gotten as much out of this, and you would have had to have managed it pretty close. So this is why I'm telling you to try to trade it in the direction of the trend, because in real time, if you had gotten in and long down here, and you were trading this up, you would have got to this point, and then maybe right here you would have realized, this thing's going back down, or maybe right here, and by then you gave back pretty much everything whatever little bit you made here, you just gave it all back. So it's this nice impulsive move, and that's it. Okay? Let's look at dollar yen. Dollar yen was a little quieter today. Again, on the 4-hour chart, we're still in a downtrend here on this pair. Okay? Here was our where we started at the lows for the day. Okay, leading into that, again, 1 hour in. Okay, we grabbed some liquidity here. Market downtrend continued. You can get more pips on this pair. This was 75 pips, even though this is not even a really big range, and it moved 75 pips. Okay, again, that took just over an hour, about an hour and 15 minutes that took. All right, and actually to get to this low, it took an hour and 15 minutes to get to this low down here. Okay, and then at 1700, again, 2 hours into the session, it went back up again. Okay, again, dumped it out, made about 58 pips, 60 pips on the way back up, and then that was it. And the rest of the day, it did drift lower again, but you can see the candle ranges are very small, and this is basically just quiet action. I probably would not have traded this. And then the day ended right there. So, all right, so you're kind of getting the hint, guys. And the last one we can look at is the Aussie dollar, which isn't as great for this because of the Aussie, I think. But again, here's the open. Here's 1 hour in. We did run up 35 pips. The Aussie dollar is not a big pip maker anyways. And then again, 1 hour in exactly, we ran back down another 35 pips. And then we actually had a bigger run up in the afternoon for about 40 pips. On the higher time frame, we are in an uptrend. So again, this was a pretty short uptrend, but that would probably explain why we got better movement right here on the move back up. And as far as what pairs to trade, guys, again, you need to stick to majors. And the reason why, if you hadn't already thought of it, is because of the spread. You're trading on such a short time frame. If you use an exotic pair, or a minor pair, the spread is going to be so, too big. And, by the time you actually get your trade filled, the spread is just going to eat up a lot of what you would have made. So you really have to keep this to the most liquid pairs with the lowest spreads. So, here's the Kiwi dollar. We can look at this one. So for today, we actually went down right at the open, but here's an hour in. We shot up 35 pips, turned around, again 2 hours into the session, went down that same amount. So you could have done that. Here was yesterday. Again, this one, again, 2 hours in, okay, was the biggest move, up 45 pips, and then it stopped. Okay, day before that, again, went down right at the open, and then about, let's see, we had about an hour and a half in. But, if you want to mark it on the hour, that would have been here. That kind of wouldn't have been a great fill. It's about 30 pips. So you can see it's a little bit less consistent with some of these non-North American based pairs. Here's the day before. The move came right at the beginning of the session. Okay, 1 hour in. Okay, up 58 pips. Okay. Now again, you can look at what's the longer time frame here. Okay. Well, the longer time frame on this pair is still up. Now, I don't know how long this uptrend is going to continue, but the trend is still up. So in that case, from the standpoint of, what direction you were going to trade these in, well, you prefer to see the long setups. So right here, okay, right here, and this move was bigger than this little down move. Right here, this is clearly, better than this move. Okay, this was an inside sideways day, really nothing going on there. All right, this is one where, the down move was a lot bigger. Okay, so I do find that, if I had to rank the three best pairs, it would be the dollar yen, dollar Swiss, euro dollar, and then secondarily, maybe Kiwi dollar, Aussie dollar. But those first three ones, dollar yen, dollar Swiss, euro dollar, are the three I would look to first. Okay. And honestly, that's really all you need, because you don't want to be over trading this anyways and jumping in and out of 10 different trades every day, because the chances are you're going to end up getting stopped out of a few of them or having bad fills or getting out too early, and then by the end of the day you had placed all these trades but you didn't get anywhere. So I would just limit it to those 2 or 3 pairs. And if there's going to be a trade, there's going to be a trade on those 3 pairs. You don't really need to go anywhere else, because this is really based on the dollar. So if there's, like I said, if there's going to be a trade, there's going to be a trade on any of these. Okay. And so you can just pick 2 or 3 and just be done with it. And as I said yesterday, if you wanted to just pick one, that would be fine too, and just play that one every day. All right. And if you don't get a setup one day, then you don't get a setup, or if you try a couple of times and it doesn't go anywhere because it's an inside day like this, well, then so be it. You're going to have days like that. So, but you can see, in a 5-day week, 4 out of the 5 days, you're probably going to get a trade. You might have one day like this where it doesn't do anything, but the rest of the week, it probably will move. So, enough to, to make a few dozen, maybe 50, 60 pips. And maybe you catch a move in both directions too. So anyways, guys, just keep back testing this thing. But I just wanted to, show you some the setups from today. And, you can see that this is very easy to test, guys. There's absolutely no subjectivity here. You're just looking anywhere from 1 to 2 hours post New York Open. You're waiting for that first trade to come in 1 to 2 hours afterwards, and then to move for 1 hour, and then potentially after the end of that 1 hour to take a reversal trade back in the other direction. So whether that first trade comes at 1 hour in or 2 hours in, but at the end of that time to basically trade it, to exit and trade back the other way again. And, just practice good money management, but, keep your stop pretty close, because you really don't need a big stop. If you're right, it's just going to go. If you're not, you'll be taken out pretty quickly. Okay? And that's it. So let me know your thoughts, guys. Hit that like button, please, down below the video. And if you're just finding the channel, subscribe for the down in the lower right corner, you see the subscribe button, and ring that bell notification icon. And that's it. I will talk to you soon, and we'll do some more updates. Thanks, guys.